Hey, real estate rock stars, welcome to the whole enchilada of real estate investing, the only podcast that serves up the full feast of street smart strategies to build wealth and take control of your financial future. I'm Lou Brown, and I've been in the real estate game since 1976, so I've learned how to make the whole plate worth it. Each week, I'll be dishing out creative financing hacks and proven systems that help investors build multi-million-dollar businesses. No fluff, just the good stuff straight from the source. Ready to dig in and start making deals? Let's get to it. Hi, everyone. It's Lou Brown back with another installment of the whole enchilada of real estate investing. And we have an amazing guest today, Dr. Alan Lomax. And I'm going to let him tell you who he is and what he does and what he's done over the years and a little bit about his family and that kind of thing. Dr. Lomax, how are you?
I'm doing wonderful, and I'm privileged and honored to be with you today, Lou, and looking forward to talking with you and giving some good content for your audience.
Tell us a little bit about your background. So what kind of doctor are you and what have you learned over the years?
My background is in psychology and higher education, but over the years, I found my way into the world of passive investing, not just to build wealth, but to reclaim time, freedom, and really essentially meaning. Today, I passionately empower other professionals who are passionate and who enjoy the work of their calling, whatever that is, and helping them to create financial wealth through secured alternative investments. And my goal is to support people in aligning their passions and their values with their financial wealth development so they can make the kind of impact that they're truly called to make in this world. And along the way, I have also carried a deep passion for horses and for creating a more humane world for animals and humans alike. And so, why is that all important to me? I was a very late bloomer, you could say, and that's putting it mildly. I was 38 years old, and a major crisis in my life that I thought was the end of the road for me. And I thought it was the worst day of my life. And actually, it turns out it was the best day of my life because scales were lifted from my eyes, and I found myself in counseling for the first time in my life, and it reoriented my whole entire life. I went back to graduate school, got a degree in an area that I had never, ever considered, and that was in counseling. And then that led to my PhD in organizational system psychology. And since that day, I have been passionate and have been passion driven to help others to find their passion in life so that they don't have to spend the first 20, 25 years of their life floundering around hoping to find a pathway. And so that led me to higher education. I still work with young students all the time and passionately engaged in challenging them to find their way. And then that was wonderful, but higher education is a wonderful occupation, but no one's going to get wealthy as a professor. And so I found my way into real estate. And I was doing really quite well up until the 2008 crisis hit, and I lost all of my wealth and went into another very deep and dark period of my life, and it took some time to come out of that. But I found my way through mentors, through mastermind groups, and found that I could redevelop my wealth and do it better than what I had been. I had been investing in single family homes. I ended up finding a pathway through multifamily and commercial real estate investing, and that's where I still reside today. and my work is to help others to find their passion and to align their passions with their wealth development.
Wow, what you said is a real eye opener because there's so many folks. I say that we're beings and bodies on a journey, and that all of us have our passion. All of us have our thing that we are our DNA, direct access to the master. We have gotten certain benefits and certain things, but they do sometimes have to be uncovered and discovered, and they're not readily present until we're exposed to something that we go, aha, there it is. I love that. That's a good thing. And one of the things that we have over the years discovered is a lot of people want to do more than just make money. And we are real estate investors, and we do have a passion to help deserving families end up with home ownership, regardless of credit or financial background. So in our world, we've been able to channel some of that energy in real estate investing to a higher cause and a mission. Our mission is to transform lives through affordable housing to empower families and individuals to enjoy the American dream of home ownership. So I love what you're sharing because definitely there are folks that have navigated and gravitated to our world that wanted something more than just making money. You are letting us know that there are folks that need that out there in the world as well.
I love what you are doing, and home ownership is a wonderful privilege, and over the last couple of decades, it has become more and more out of reach of the average American working person. And so, what you're doing, I think, is just wonderful because home ownership, it isn't just a means of helping people to develop and hold their wealth, but I know for me and myself, it just is so different living in your own home as opposed to renting somebody else's home. It home is where the heart is, and it just makes so much difference psychologically and emotionally.
One of the things that's very interesting about your background and what you're sharing with us today is the psychology of the seller as well. One of the things that we discovered, and I did this quite by accident, I have a book called Doing Good While Doing How Real Estate Investors Provide a Service and Make a Difference. And that book I presented to potential lenders, private money lenders, as well as city council, county commission, as well as over the years, I discovered when I was talking to a seller that the seller was interested in this as well. So I, by accident, mentioned to the seller what we do is put our deserving families into your home. And the seller leaned in and I went, "Oh, I think I have a book out in the car. Let me go get this." And I brought the book back in and I sat down with the seller and I really just told her who we are and what we do and how we operate and how sellers like her and houses like that are used in our program to help deserving families end up with home ownership. I ended up doing that deal. And this was a lady with a tremendous legal background, 42 years as a paralegal in one of the top law firms in the South, and on the 42nd story and all of that sort of thing. And she was a 30th story, sorry. And she was just amazing. And she totally opened up to me. And I ended up buying that property at a very good price. And I went, aha, there it is. Psychologically, the seller wants to participate too. The seller who has some equity may want to put that equity to work, and in doing so they're actually helping a deserving family. They raise their kids there, the dog is buried in the backyard, they've got all these emotions attached to that property, and here we have the opportunity to serve the seller as well.
Yeah, it is. We hear a lot of things this day, a lot of trash talking about people in general, but my experiences with people is that people are, for the most part, they're basically good, and people want to do good, and they want to leave a the world in a better place than what they found it. And if you give people an opportunity to find avenues to do that, and particularly if you engage them in whatever their passions are at the same time, then you've just got a dynamically winning formula. And yeah, people want to do good.
Oh, I love that. I love that. And thank you for sharing. Definitely that psychology of the buyer, of the seller, and like you said, that moment in your life where the scales are pulled back from your eyes and you actually discover there's something more to life. There's something more to what you're doing and how you're doing it. So you have evolved yourself, not only yourself, but also as an investor. So you said you started as single family and then multifamily and commercial properties. Tell us about that journey.
I was, like I said, I got a very late start in life. So when I lost everything in 2008, I was no spring chick. And I was essentially starting from scratch. I didn't lose absolutely everything, but it was pretty close to that. And so I was starting all over, and at an age when most people are stepping into retirement, and I was on the verge of that. And until 2008, I thought I had everything wrapped up and was going to have just a wonderful retirement, and suddenly it was all wiped out. And so when I went through this very dark period, and here I am a counselor, and I'm in psychology, and I'm supposed to have my act together emotionally and psychologically. I was torn to bits as just like any other person. And it took a good 5, 6 years to reorient myself psychologically and emotionally. And getting that all back together, I realized that the route that I was taking in terms of the single family homes and trying to develop wealth that way, that was just not going to work. That I needed a way to scale and develop my wealth much faster than what I was doing. And so, through networking, developing relationships, through masterminds, through developing my podcast and developing an extensive network of very successful operators out there, I realized that the way to scale was actually to go into multifamily, and because it's just much more scalable, but it's more than that as well. It's much more risk adjusted for a number of reasons. If you have a single family home and you lose a tenant, you've got a major mortgage payment on your hands, and you're paying that mortgage until you get another tenant in there. In multifamily, you've got multiple units. And if you lose a tenant in your multifamily property, you certainly are going to have a reduced income stream, but you've got all of the other tenants who are there potentially paying their rent. And you're never going to have, if you're operating your properties appropriately, you're never going to have a 100% vacancy rate with a multifamily property. And so it's risk adjusted in that way. And the other way that it is risk adjusted is that in multifamily, in single family, you can operate as a solo entrepreneur. In multifamily, you really need to be working with teams, and you have the power of teams. And that was what was so attractive to me. And going into multifamily is that there are teams that are already established and who know what they're doing and have not only the background and expertise, but they have the capital backing them. And I can become part of those teams because there's always some place in any team that there's a soft spot and they need someone to come in and help them through various different things. and just find that spot, and you can find your way into multifamily in a way that can help you to develop your wealth and help that team to develop as well.
Interesting. So, in your world, what is it? What part do you play in that?
I I had the background in terms of real estate investing, and I also have a broker's license, and so I have done a tremendous amount of real estate transactions from sourcing to selling and negotiating and looking at markets and doing cost segregations and all kinds of different things. So I had a pretty extensive background in there. And then my degree in psychology is organizational systems psychology. So I had a wealth of experience in terms of organizations and systems. So I thought initially, as I was looking into multifamily, I thought, I've got all this background and experience. I can do this myself. And that really was the way I started looking into this. And I was developing relationships with brokers and sellers. And early on I realized, yeah, I could do this. I could develop my own company from scratch. And but then I looked at the whole enchilada, which is and realized that was I could do that, but why do that? There's already established operators out there who are looking for people to fill in the gaps in their organizations. And the gap that I found that really almost all people are looking for is they need help in raising capital. And I had been developing an extensive network of investors and operators, and so that was the niche that I fell into was capital raising.
So let's talk about capital raising, and you are correct. That's typically the thing that stops people, entrepreneurs. They're out there, they find things, but they don't have the funding. And in fact, they don't even want to go out and find things if they don't have the funding in place in the first place because they're afraid they're going to find something and they're not going to have the funding for it. So tell us about capital raising.
Well, capital raising is fascinating to me in particular because it helps me to feel that passion that I have for empowering others to engage in their passions, to engage in the work of their calling, and at the same time find an avenue to develop their wealth. Our passions, our calling are what we really need to be focusing on. And if you're in higher education, if you're a physician, an architect, an engineer, any profession that requires a lot of education to even get into it, it's once you get into your professions, you're still going to find that you have to put a lot of time, effort, and energy to actually develop in that profession. And we don't have a whole lot of time to look at investing in single family real estate like you're doing. We don't have a whole lot of time to go out there and be active investors. And so the people I work with are engaged professionals, and they don't want to leave their professions. They want to engage more passionately in that. And so through passive investing, we give them those opportunities to put their excess capital into to higher yielding alternative investments than what they could ever find through traditional public markets. And if you've got a 401k from a former employer, or you have your IRA, or if you've just been a good steward of your money and you're in an established profession and you've been in that for 5 to 10 years, you should have a substantial nest egg. And the best way that I know of to do that is through alternative investments. And that's what we do. So,
Excellent. So those investments that you're finding, you need capital for those. You're finding people that have rocking chair money, so to speak. It's sitting in their bank account, it's sitting in their 401k, it's doing next to nothing. And you're saying, hey, you can put that to work using safe, secure real estate, and you can get a nice return on that. So, what kind of return can your investors expect?
The investment opportunities that we look at an average annual rate of return of a minimum of 18%.
Ooh,
And it
yeah,
goes
baby.
up, and it goes up from there. Uh, and that sounds outrageous to a lot of people who think that 5 and 6%
It's
interest
a lot.
rates are is a good investment, and they hear these things like 18% plus annual average rates of return, and the first thing they think is, this sounds extraordinarily risky. It could even be fraudulent. And I know, I know exactly how they feel because that is exactly where I was coming from. And so I know the fear and the terror and that legitimate concern of all the risk that can be involved in that.
There's a lot of people that work very hard and actually do all the heavy lifting to get 18% and more. So for people to have the opportunity to put their money to work and get that kind of return, that is not only return on investment, that's return on energy. So very little energy has to be spent to invest in that way. So what kind of investments do you put their money to work doing?
Well, it is our bread and butter is multifamily, and it generally is what is considered value add multifamily, which is the operators, the ones who are actually doing the work. And like you said, there's a lot of work that goes into these projects, and it's not just work. You have to have expertise and knowledge in a lot of different areas to get these kinds of returns. And and so I've lost my train of thought. What was your question? I'm
Yeah, and
sorry.
what do you put their money to work doing? And you're
Okay.
saying you're purchasing multifamily properties. How are you finding those multifamily properties?
That's an excellent question. And that is, the successful operators are the ones who are doing that work. And that is an extensive part of that process, depending on the markets. And the markets over the last 2 years have been really challenging, particularly to find these opportunities that return these kinds of returns. So, who are the ones finding those? They're the ones that have an acquisition team. And on average, these acquisition teams are actually going through 300 different opportunities to find the one that is going to deliver those kinds of returns. And so it takes an extensive amount of networking, it takes an extensive amount of knowledge and understanding what makes a good deal and what does not make a good deal. There's 300 opportunities out there. You could buy any one of those, but only one of those is really going to return those kinds of returns. So the work that I do is I find the operators who are doing that kind of due diligence, and then I bring the money to those operators who have
Yeah.
that team in place.
All right. So they have gone through 300 properties, they found one, and then they come back to you and they say, hey, we've got one and we need X dollars. So what's the average amount that you have to raise for those kind of deals?
We're looking at complexes of 100 plus apartments. So the capital that needs to be raised for that is anywhere from $10 to $20,000, $10 to $20 million or so. And generally speaking, I'm not the only one bringing money to those opportunities. There's generally a pool of capital allocators like myself who are working with these teams to bring that kind of capital to the deal.
Now, are you raising money also for the build to rent concept?
I personally stay away from that because just because of the risk and because I'm taking other people's money into these deals, and I do not ever want to lose money for people who are investing with me.
So you
Uh,
think like I do, touch it, feel it, value it, and monetize it the day after you close. And so I
right.
definitely get that concept, and it's what I preach and teach too, because you can take risks and there might be a reward, but that reward might be somewhere down the road, and we don't know how many months or even years it'll be
Mhm.
until you get paid. When that's speculating, right, on the
Mhm.
future that might be present on a new build as opposed to something that can be
Yeah.
resourced right now. And like you said, you got to kiss a lot of frogs. You got to figure out and find where the low hanging fruit is. And there's in a market, there might not be a lot of low hanging fruit. So you have to look at a lot of different markets. You have to look at a lot of different opportunities. And the market does change every single day. So there's always opportunities that do present themselves, and you have the ability. So if we were to come to you, you have, and we found a deal, then you would be able to raise some or all of the money for us to be able to purchase that property and take it out to the, like you said, the value add to bring in the new dollars and now make that property worth a lot more. Is that right?
Yes, that's yeah, good description of how it typically works there. And the reason I don't do the ground up development is because I had in the past, I had gotten involved in spec home development, and just even on a smaller scale, on a single family development level, there are just so many things that arise in that construction process that are essentially out of the operator's control, and so it is risky. You're going to get higher returns with a potentially get higher returns, but lose your you can lose your whole entire investment and do it much easier in ground up developments than you can in established properties.
Excellent, excellent. So we could either bring money to you or we could come to you for money. And we could even bring deals to you that you could now have your team evaluate and see if that's an opportunity as well. Is that correct?
That's correct. Uh-huh.
Wow, that's great. So you are a great resource, and definitely that's one of the big issues that lots of folks have is the opportunity to access capital. So you're not doing single families these days, you're doing much larger properties, 100 plus. So those of you out there that are finding those kind of options and those kind of opportunities, they do exist. And there's people that specialize in less than 100 units only because there's a lot of people going after the 100 units plus. And that's where the quote big money unquote typically goes for is the 100 plus units because the economies of scale are so true, and that 100 plus you can do the maintenance man on site, you can do so many the leasing agent on site, and there's just a lot of reasons that when you get into that 100 plus world, you're able to scale and monetize better. But definitely, it's exciting to know you. It's exciting to know that we can access that kind of capital. And more importantly, for those of you that have some cash to work with, that kind of return on investment that is very attractive and makes a lot of sense. Tell us about a project that you're currently working on that you need funding for.
We actually just recently closed on a portfolio that was a total of about 205 units, and it was actually three different complexes, in one particular city in one vicinity, so that there is that economy of scale there with one manager and with maintenance teams and what have you there. And the properties, the three properties, one was built in the 1970s, the other two were in the late 1980s. And so they are what is considered a B class property, a minus B class property for workforce housing, and they are in a and these are the things that we always look for. Is it in a growth area? Is the population growing? Is income growing? Are the job opportunities growing? And so this property meets all of that particular criteria. And so it's always easier to paddle with the stream than to paddle against the stream. And so those three things are always critical things that we are looking at when we're looking at properties. And these properties fit that mold and they fit it very well. They are two of the properties took very light renovations, and then the third property was a pretty heavy lift. And we typically don't like going into properties with heavy lifts because just ground up, there's the heavier the lift, the more risk is involved in there. But this was with a very experienced team. The properties, the three properties are in the community that they live and their central offices are located. They know the city council, they know where the growth level is at, and so it was worth taking that risk, and that was only a portion of that portfolio
So,
anyway.
so in that example, what were the numbers on that? How much did you have to raise on that?
The total raise on that was 1,010,000,000, and we brought to that about 1,000,000 from our investors.
Ah, got it. They're using a consortium of money in order to be able to do the deal, and you can participate in that consortium. That's
Correct, right.
good. And with those kind of returns, it definitely makes sense for people to come in there. So, thank you very much for the insights that you've provided us today and the definitely access to you. So, what would you want to share with our audience about contact information, how to find you, that kind of thing?
Welcome anyone who would like to talk with me. We offer a free consultation, and they can find that at our website at Steed, like the horse, Talker, like I'm doing now, .com. So that's STEED, Talker, TALKER.com. And there's multiple links there to schedule a free consultation. And whatever you want to talk about, we'd be happy to do that.
That's a beautiful thing, my friend. Definitely, we appreciate your being here. Any parting words for our audience?
Be kind to yourself and develop your passions, and be sure that your finances are supporting those passions and allowing you to make the meaningful and significant impact in this life that you long to make.
Dr. Lomax, you have been amazing, and you certainly have been there, done that, experienced that, and certainly those are words of wisdom that people can take away from the whole enchilada of real estate investing. Thank you, everyone, for joining us today, and look forward to seeing you soon. Yeah, baby. Thanks for tuning in to the whole enchilada of real estate investing. I hope you're feeling ready to take your investing game to the next level. If you're serious about building wealth, you won't want to miss the Millionaire Jumpstart. It's a 3-day live event that's perfect for any level of investor. Whether you're just getting started or you're looking to scale, this can be one of the final steps of making real wealth happen. So, what are you waiting for? Enroll now at millionairejumpstart.com and get ready to make big moves in your real estate journey. I'm Lou Brown. Until next time, keep hustling, and remember, it's not about how much you make, it's about how smart you play the game.